It's funny because after 3 weeks in Bali, the market is back in the green. Right when I get back, how long ago did I land? 2 hours ago, I showered, did my hair, and now the daily update. Forgive me for being late, but I just landed and I'm jet lagged. Anyway, but above all, some pretty good news because the market is in the green. So that's pretty good news. I don't know how you woke up this morning, but it's true that we've been consolidating for quite a while. 88,000. We finally broke through 94,000. 500, we had a sort of pullback here, and we're currently testing this area between 97,000 and 102,000, and club members will know what I'm talking about. And this area will be critical here. But let's go back for a moment to what happened, because we really experienced a surge. Bullish, because Bitcoin just crossed, as I told you, $96,000, and that was last night, a level we hadn't seen since mid-November 2025. So that's significant too. A strong start to the year with more than 10% performance in 2026. By the way, remember the statistic. If the first 5 days of the year are green, generally the rest of the year is as well. But what's even more revealing is that things have been happening behind the scenes, because nearly $458 million worth of crypto positions have been liquidated, mostly on the short side. And to be clear, this isn't just a minor technical push, it's a real short squeeze, which is exactly what happened. So traders who were betting on a drop got caught off guard and had to buy back urgently, which further amplified Bitcoin's upward movement above $95,000. And as I'm speaking to you now, we're at $97,400. So we've got quite a significant surge here. By the way, tell me, do you think there will be a pullback or will the trend continue? And how far could we potentially go this week? And actually, this kind of rebound is fueled by liquidations of short sellers, which shows that the market is really trying to regain control. But now the question is whether this momentum will turn into a trend or if we'll fall back into the indecision of the past few weeks. And we'll get the answer in the coming days. But for now, the market is finally, hence my thumbnail, showing signs here of a recovery and authority. And precisely to illustrate this, it's almost the best news of the day. It's that famous fear and greed index, which after several weeks stuck in fear and then in extreme fear, remember, we're finally seeing the crypto fear and greed index return to the neutral zone. And here we're no longer in panic, we're no longer in widespread distrust like before, but the market is finally breathing again. We're talking about a fear and greed index at 48 here. And this change is far from insignificant because we hadn't seen such a level of neutrality. We're still settling for neutrality, all right? It's not extreme greed or even greed, but we haven't seen neutrality since the end of October. So this is exactly the kind of signal that confirms what we're seeing in terms of price, meaning we have a market that stopped being afraid, that's absorbing the selling, and that's finally starting to accept the idea of a recovery. So here there's still no euphoria, but a return to calm. And often in these areas, actually, we see real trends forming, real bullish trends starting up again. And the timing is perfect because with Bitcoin's pump, both sentiment and price are finally starting to realign. And we'll take a look at it together. What really triggered this huge short liquidation cascade that propelled Bitcoin to levels we hadn't seen, or at least hadn't seen again, for quite some time. And as you can imagine, BTC did not jump from 90,000 to 96,000 all at once. It went through several very clear stages throughout the day. And the first one was obviously the 94,500 zone. I mentioned it to you. It's what we had identified together on the channel. And the main catalyst that opened the door to this breakout was the numbers everyone was waiting for, the famous CPI. And the CPI year over year came out exactly at 2.7, right in line with what the market was expecting. So here, no nasty surprises. There was no inflationary spike. And even though inflation remains stuck in quotes above the 2% target, even though on Trueflation we're at 1.70. So below that, we could even talk about deflation. Well, the core of inflation here, so the heart of it, even when you exclude energy and food, well, it's simply continuing in a disinflationary trend, a gradual one. In other words, nothing to panic about, but enough to push the Fed to speed up rate cuts. Coming up soon. Remember, I told you, I mentioned the 18th. No, it's actually the 28th, the next Fed meeting. But what makes me think a little... In any case, what I see reminds me a bit of what we usually observe when the market is relatively calm. That is a very high probability that the Fed will remain on hold at the end of January meeting. And it's precisely this lack of stress that has allowed Bitcoin to breathe. And then the number comes out. That is, the market digests it a bit more, like it's not worse than expected. The famous liquidity eases slightly and the shorts start to get squeezed. So in just a few minutes, Bitcoin jumps from 94,000 and gains more than $2,700 right after the release. By the way, the PPI has risen to 3%. I think expectations were at 2.7. The numbers have come out. It wasn't that long ago. I didn't find the tweet for you here, but I'm telling you about it. Also, while the market was still digesting the CPI, Trump, of course, wasted no time in putting massive pressure back on the Fed, because just a few minutes after the numbers were released, he directly called on Powell to lower rates. And true to his style, he even dropped a "thank you, Mr. Tariff." So thank you, Mr. Tariff, just to remind everyone that, according to him, his trade policy is keeping inflation under control. By the way, I listened to some kind of audio with Donald Trump, and it was quite surprising because, remember, he had promised $2,000 to every American, well, below a certain income threshold, as a reward for the tariffs. And there was a journalist who asked him when he was going to send out those checks. He said, "Oh, really? I said that? I don't remember. When did I say that?" He had almost forgotten, but then tried to recover and said that it's planned for the end of the year. So for now, these kinds of stimulus checks, they're not for right now, but for the end of the year. It's January, so we still have time. But there you go. He's backtracking a little on some of his statements. But the most striking thing is that he then added in an even more explicit statement. So, and here, let me give you the translation. When the market goes up, so when the market rises, the Fed should lower rates. So the Fed should cut rates, and I want someone who lowers rates. So what's being implied here? What Trump is clearly saying is that he wants a Fed chair who cuts rates, not based on economic data, but based on market performance. By the way, we're potentially talking about, I had to mention this to you starting from January 31st. A possible new shutdown is something to watch out for because we know the last shutdown did a lot of damage. It lasted 43 days and caused a lot of harm to the market because of all the uncertainty. So we also need to be prepared for January 31st, but I'll talk to you about that then. On the daily updates, don't hesitate to subscribe so you can stay informed about all this information. But actually, what Donald Trump is saying here really sets the tone for the coming year. Because if we combine his outlook with the political pressure, the inflation numbers that are slowly coming down, and a stock market that's off to a very strong start in January, we can expect 2026 to be an absolutely exceptional year on the macroeconomic front and inevitably for the markets as well. Crypto too. Let's move on to the US Senate, which has just unveiled a new bill on market structure, cryptos. And you'll see it's very interesting. And honestly, it's one of the most serious attempts in years to finally provide a regulatory framework and above all a clear one for the sector in the United States. Because today, let's be honest, crypto operates in complete fog that is supposed to be cleared up, but in reality remains very dense. Because no one really knows exactly who regulates what. Is it the SEC? Is it the CFTC? There's no clear division of responsibilities here. And projects have no certainty about how to launch their tokens, nor do investors. They are navigating a system where nothing is really regulated. And this bill is precisely trying to put an end to this chaos. And now we're going to go over the most important parts without really going into depth or detail, but this bill starts with something everyone was waiting for, clearly defining who regulates what. Is it the SEC that handles securities? Is it the CFTC that handles commodities? And finally, we put an end to the confusion where each agency tries to take over everything. Above all, there's one important thing. It creates a new category of assets that could be a game changer. These are what are called ancillary assets. Basically, these are the well-known tokens that are neither shares nor financial securities, but utility assets linked to networks. The text also requires a real level of transparency. And these projects will have to specify who is building them, how the tokens are created, who holds them, and how many. These are governance rules here, along with the associated risks. In short, say goodbye to those vague white papers thrown together in 3 days. And if a project, for instance, raises a lot of money, it will have to publish data, conduct audits, prove the existence of the funds, and clearly explain how they are used. So that's actually a good thing. And this part, in fact, directly addresses the abuses we've seen in recent years with ICOs, with treasuries that were fictitious, or promises of funding that were impossible to verify. So exchanges would also be regulated like real financial platforms, with a strict separation of client funds to specifically combat market manipulation, like what we saw on October 10th. Anyway, let's move on. There will also be somewhat tighter market surveillance and mandatory proof of reserves. And here we're talking about Ray, who would have probably prevented fiascos like FTX, remember, at the end of 2022, or also some questionable practices that are still very common on certain offshore platforms. Last but not least, we also have DeFi, which is now officially taken into account in financial planning, cybersecurity, and systemic risk analysis. And here it's no longer at all an experimental toy. It's now recognized as a building block of financial infrastructure. And to sum up, actually, this bill marks a turning point, because we're moving from a world dominated by lawsuits, where there are a lot of gray areas. And there's also a constant fear of regulation, to something more structured, more understandable, and much more institutional. So here, it's not been voted on yet, far from it, but it's clearly the direction of crypto finally integrating into the financial system, instead of fighting against it. And precisely on this topic of regulation, because there's also an important point that just came up, which could completely change the way some major cryptocurrencies are treated in the United States. According to Eleanor Terrett, with the new bill, assets like XRP, SOL, LTC, so Litecoin, HBR, Doge, or even Link could be placed in the same regulatory category as Bitcoin and Ethereum, on one condition only, that they are linked to what is called an ETP. So that's a financial product that is listed on an exchange. In other words, if these cryptos are included in regulated products like ETPs, they could benefit from the same status as Bitcoin and Ethereum. That is, they would finally escape the legal gray area they've been stuck in for quite a few years. And that is pretty huge, because that would help normalize a large part of the top of the market and open the door to much broader institutional adoption. Now, that doesn't mean the battle is won, nor does it mean that regulators are going to approve this overnight. But the mere fact that this is included in an official document shows that American regulation is starting to shift toward a much clearer classification system, much clearer. And if these assets end up joining the category of non-securities precisely thanks to their inclusion in investment products, then the impact on their flows, their liquidity, and also their legitimacy could be massive. So we're gradually moving toward a landscape where the rules are finally becoming clear, and for the market, that could potentially be a real game changer. Excuse me, I need to take a drink because honestly, I'm talking so much that my mouth is getting dry. But while we're on the topic of market structure, there's one figure that really sums it all up on its own. The scale of the phenomenon is that Binance has literally dominated the entire spot market in 2025. And here we're talking about a platform that generated $7 trillion in volume over the year, which is more than 41% of the total volume of the top 10 largest exchanges combined. And to give you an idea of the gap, that's about 4.6 times Bybit's volume and almost 5 times that of MEX. By the way, there's currently a promotion on Bybit. I'll put the link in the description. I think it's $65 for every registration. Don't hesitate. You can also take advantage of my website, julianroman.com, which lists all the best bonuses, so don't hesitate to take advantage of it. And as I was saying, when you have a player that takes such a large share of the market like Binance, it has two effects. That is to say, the first effect is actually quite positive because it means there is more liquidity. In the same place, there's less slippage and better execution prices, and an environment that's generally smoother for traders, and that's the case for most analyses. On-chain analyses, well, they're done in relation to that platform. And the second point is that it might be more delicate, at least for her, because there's such a concentration, and that also means that global spot activity largely depends on a single infrastructure. So when there's a monopoly, that's not good either. It's not good. When FTX was around, it was the same. At least it spread the liquidity out a little bit. Anyway. And to finish with an on-chain signal that really deserves all our attention, let me zoom in on it for you right here. It's the selling pressure on Bitcoin futures contracts, which has just collapsed. And I want to say finally, because during the worst part of the correction, the net take volume, which is shown here at nearly 489 million, well, actually minus 489 million, this means that sellers were aggressively hitting the order book to drive the price down. And today we've dropped back down to less than 51 million. So that's almost 10 times fewer forced sales in just a few days. And sellers still have a slight hold on the market. But the aggressiveness we saw at the beginning of January has completely disappeared. And that's exactly what explains why Bitcoin stopped falling in a cascade. Because as soon as these selling flows calm down, the price can finally breathe. It stabilizes and finally allows for a rebuilding structure. So we haven't yet moved into positive territory. That is, into a market where buyers once again dominate the futures, specifically the futures market. But often, as soon as the signal switches from red to green, history shows that momentum often changes very quickly. So it's precisely this type of indicator that signals reversals before we can actually see them on the charts. All right, let's quickly take a look at Bitcoin, in total around $97,000. We'll see if we retest the 50-day moving average in the coming days. I'll keep you updated. Don't hesitate to apply for the club. If you ever feel lost in this world and want to be guided by experts, and my whole team is here precisely to help you become part of the 5% of winning investors. I'll put the link right here for you. It's a free call with members of my team, and you get direct access to me. I'll see you very soon. See you tomorrow, hoping the market stays in the green. Feel free to leave your thoughts in the comments. Tell me, Bitcoin at 97,000 is, and finish the sentence. I'll be checking the comments. This was Julian. See you soon. Ciao.